talk to me about these, the prime rate indices, and explain what they are, maybe like as if we're 5-year-olds to people, because they're really important, but it's a concept that doesn't really exist in crypto, I would say.
So rates and, interest rate products are the big whopper for financial institutions, right? They trade more than equities markets, more than commodities markets. And so it was very strange that we noticed that there was no kind of LIBOR, SOFR-esque index in the crypto market, right? So LIBOR was the famous, London interbank, rate index.
And how would you explain LIBOR to a crypto person? Because they probably wouldn't even know what that is. It's basically where you can borrow or lend money in a certain term, right? Or an asset in a certain term, right?
Basically a benchmark for lending. And so you can price credit against LIBOR and say, okay, Brian is a strong counterparty, I'm going to lend to him at LIBOR +5. And now after there was a problem with LIBOR, there's a new index, the SOFR, which is SOFR index, which has become sort of the new standard. And so, they'll say, I'll lend to Brian at SOFR +5 or SOFR +2. And
so it's a base rate, and then that +5 indicates my kind of credit risk on top of that. But it gives you this base lending rate that's very normal in finance, but kind of doesn't exist in crypto, because crypto is born of assets and kind of asset prices.
Yeah, so we've built the VIX index standard for Bitcoin. We realized we had this massive distribution insofar as we're on TradingView, CoinMarketCap. We talked to some users about, just in casual conversations last year, and they were like, hey, I'm pricing credit for my users and I'm basing it on SOFR. And they were like, this is a big trading desk. And they're like, well, SOFR is actually not a crypto thing, so this is a little bit clunky. And they're like, well, we could probably solve that with a product we build. And so we set out to build the Volmex prime rate indices, which are a family of 6 indices right now. We're actually, some alpha. We're going to launch the Solana, a couple of Solana indices for a VPR soon. And basically the Volmex prime rate indices track the cost cost of capital in the crypto market. And so the core of these is the Volmex Bitcoin DeFi lending rate index, which basically tracks the cost to borrow stablecoins on DeFi venues versus the cost of lending. And so it's basically the cost to borrow stables against your Bitcoin. And so, it's a really good benchmark index for like an OTC lending desk to say, okay, I'm going to lend against the BDLR +3 to Brian. Or, there's exchanges actually have come to us and said, we want to list futures on this. And so,
how do you get out of a rat race? How do you create wealth not only for yourself, but also for the generations to come after?
I am absolutely amazed with the quality of companies that we're getting exposure to.
We go on to Zoom calls with the innovators and the folks who are building new applications in metaverse, blockchain, artificial intelligence, decentralized finance.
What's going on, everybody? Thumbs up if you can see me.
We are focusing on early stage investment.
And the quality of people that we're getting exposure to, whether it be Dan Tapiero with 1RT, Jason Ma from Open, Yatsu from Animoca.
It's been a phenomenal experience thus far. It has far exceeded my expectations.
We are focusing on cutting edge technologies.
I view it now as the best investment I've ever made. The upside I view is unlimited.
And as a retail investor, I would never get this exposure anywhere else outside of Investment Club.
See you in the Investment Club.
What started as sort of an OTC lending benchmark idea actually has evolved into sort of a tradable product that should soon be coming to the market. And so we have the DeFi lending rate index, then we have the funding rate indices, which track funding rates in CeFi space across OKX and Deribit and soon more. And so, and then we have a third index called the Volmex Prime Rate Index, which kind of weights these two former DeFi lending rate and the funding rate index at 50%. And so we have DeFi lending rate index, funding rate index, and Volmex Prime Rate Index, which are all these interest rate rates benchmarks for the crypto space, which are truly unprecedented.
Yeah, that's very interesting. What would those look like? Like if I went in to look at, say, LIBOR rates and looked at those compared to, say, a BTC funding rate, what kind of numbers would those look like? What would that feel like? Are they significantly lower or higher? And maybe I'll ask why, or what does that imply about the market?
Well, so I'd need to pull up a couple metrics to check exactly, but the DeFi lending rate index is currently about 4.3%, and so that's basically the delta between borrowing your stable coins on an Aave, Morpho, Compound, sort of weighted average across those venues, versus deposit, lending your Bitcoin. And so I do need to double check what the ETH DeFi lending rate is, but these are a bit higher than the TradFi space.
Okay. And that number in general, what does that tell me? Like if that 4.3% went to 0 or it went up to 10%, it kind of tells me kind of like the demand and the supplies of those assets relative to each other?
It kind of shows you the cost to borrow stablecoins in crypto. And so in previous bull cycles, you've noticed that when the market gets very bullish, there's a very strong demand for leverage. And so effectively this rate could increase when the market is highly levered. And so it's kind of the cost to borrow, the cost of capital in the ecosystem. And so it's a very good proxy for how much demand there is for leverage. And so we've actually just started publishing these in production a couple months back. And so there'll be, we can run some back tests and there'll be also just more historical data building up. But generally, these give you sort of a benchmark of where the market's at in terms of how much demand there is for leverage in the system. And so, as there's more and more track record, I think this will be we can obviously backfill and backtest data and stuff, but historical calculation. But I think this will be a very powerful metric for traders, investors that want to understand the cost to borrow stablecoins relative to what it was 3 months ago, and pricing, locking in sort of fixed rate, structures. And I think it's a very powerful precedent, a very powerful primitive.
Hey, I know investing in crypto is scary. It takes a real leap of faith because there are so many scams, rug pulls, and bad actors out there. It's a dangerous business, which is why 95% of people lose all their money. Well, that's why I created the London Real Investment Club, so you can access the hottest deals on the planet and use the crypto bull market to create the generational wealth that you deserve. Join my team of over 100 people from around the world that are making millions of dollars behind the scenes investing in blockchain, AI, Web3 games, DeFi, Bitcoin, and more. Don't miss out. Click the link below to book a call with one of my team now. But hurry, this bull market will end soon.
I know investing in crypto can be scary. That's why you gotta join the investment club. Pull the trigger. Let's do this.